As the Ghanaian cedi shows signs of recovery after months of depreciation, all eyes are on the U.S. Federal Reserve's upcoming rate decision. With a potential rate cut on the horizon, the dollar could weaken, creating an opportunity for the cedi to further strengthen. This rebound comes on the heels of positive domestic developments in Ghana, including a drop in inflation and the inauguration of the Royal Ghana Gold Refinery. Now, in this discussion, we will explore how these factors, along with global monetary shifts, could shape the cedi's outlook for the rest of the year. This morning, I'm being joined by Patrick Abankwa, who is a financial analyst and investment advisor. Thank you so much, Mr. Abankwa, for joining us.
Thank you very much for having me once again on your show.
All right. Just before we get to the cedi part, let me get your perspective on this. Now, Moody's has projected a 50 basis point rate cut by the Fed on Wednesday. Does that align with your expectations?
Okay, so whilst Moody's projection of a 50 basis point cut by the Fed aligns with market expectations, I think it's important to note that the decision is contingent on some economic indicators. A significant downturn in the U.S. economy or a sudden increase in inflation could lead to a less aggressive or even no rate cut. However, given the current economic landscape that we find ourselves in, the American economy finds itself, we think that a rate cut seems more likely, but it is not something that is a must unless some conditions that I've said in terms of downtime in the U.S. economy continues, or we see a sudden increase in inflation, the rate should be going down by the 50 basis point that is being projected.
And of course, we see that the cedi's depreciation halted in August. But then do you foresee this as a temporary recovery? Because you've talked about the various things that could come to play here, or we're looking at, a sustainable trend towards stabilization and strengthening.
The recent halt in the cedi depreciation, for me, is a positive sign, but it's too early for us to declare that it's a sustainable trend. A lot depends on the first rate decision that we mentioned earlier on. Again, global economic conditions must be factored in, and then we have the economic factors that are domestic. If the rate continues from US and the cedi continues to strengthen, then it could signal to a more stable outlook. However, it's always essential that we monitor factors such as import demand, capital flows, and government policies that will be to assess the sustainability of the recovery that we are seeing in the last 2 or 3 months in Ghana.
Okay, so what would that now mean for the Ghanaian economy? Because it's been in a struggle for a couple of months now. We know that it was able to get a bailout from the IMF, $3 billion, I want to believe. But then I'd like to find out now, when you look at this and, of course, the currency and what is playing out now in terms of a possible federal rate cut, how do you think that would impact the Ghanaian economy?
So the initial reaction is that the rate cut by the Fed will likely weaken the US dollar, which could benefit the Ghanaian cedi. As a relative value of the dollar decreases, demand for the cedi could also increase, leading to appreciation of the cedi against the dollar. However, the extent of the cedi appreciation would also depend on some domestic factors, such as, again, import demand, capital inflows, and government policies. I believe that while a rate cut can improve temporal boost for the Ghanaian economy, there are some factors that must be addressed. And I think that once those factors are addressed, then we'll be able to say that the cedi has really recovered against major currencies, especially the dollar, looking at what we went through last year and even the first part of this year.
Okay, so what I know you mentioned a couple of them, but then I like to be very, very factual about the factors that you will expect to continue to drive down the issue around depreciation or improve the value of the Ghanaian cedis as well. Because, of course, the Ghanaian government has come out with different policies. As we've seen, inflation figures have dropped about 2.39% even in August. So I'm looking at what, more can be done to actually continue to steady up that tide.
I will talk of three things, and these are things that government upon government always also mention, but in terms of its implementation, it's always not as expected. The first factor is that we need to reduce our import dependency. And that means that we need to diversify the economy and promote local production, which can reduce our continuous reliance on imports and strengthen the cedi with such a step. So that's the first thing. The second thing is that government should continue to woo foreign investment into this country. And that means that we have to implement favorable policies and create a conducive business environment that can attract foreign direct investment. And that also helps the cedi to be stronger against major currencies, because these foreign investments are coming in foreign currencies, the dollar, the euro, the pound, and that helps the cedi to stabilize. The third one I think is also very important is that government should continue to manage our public debt. Controlling government spending and reducing the debt to GDP ratio, for me, can improve investor confidence and helps the cedi to strengthen. For me, these are critical three factors that government should look at if you want to sustain the growth that we are seeing in terms of appreciation of the cedi against major currencies like the dollar.
All right, thank you so very much, Mr. Patrick Abankwa. Hopefully, with all these that you've said and a possible cut in Fed rates, it will be able to improve the value of the Ghanaian economy and, of course, their cedi. And we hope that will play out eventually. Patrick Abankwa, financial analyst and investment advisor, thank you so much for your time on the show.
Thank you, too, sir.